Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, ticker symbol RUT, and I've left my lines on the chart so you can see how the forecast from last week worked out. And right here, as I highlight that with my magnifying glass, I said that early on the market would move up and bump its head against this resistance and then start to pull back. Now, we did go up to resistance, and then we started to pull back on Thursday, which was the 7th of November. On Friday, today as I record this, you'll see that this is a bullish engulfing pattern. So what we're going to do is we're going to forecast for next week, we're going to forecast a breakout of that resistance because of that bullish engulfing pattern into new high territory. Then we'll have to see whether or not the markets start to pull back to that 20-period moving average, which is this blue line. So I'm optimistic for next week, especially early on in the week. I think we're going to have a repeat performance of what we had this week. And if you have any long positions, I think what we could be seeing is an early rally into the year-end rally or Santa Claus rally. So keep your seatbelts on. At all times, I would be protecting any of those profits because once a stock breaks out over resistance, we generally see a pullback to that former resistance and it then acts as support. That's called the role reversal. And I'm going to direct you to a video right at the end of this broadcast where you can find a very short video on what that role reversal looks like. So that's the Russell 2000. I'm going to hop right to the VIX. The volatility index is a leading indicator. It's inversely related to the S&P. I said we would move down, test support, and then bounce. And it did that. It didn't quite hit my target, but it did bounce off of that support level. Now look a little bit more closely and you're going to see that this is a bearish engulfing pattern. What does that mean? Well, bearish engulfing patterns tell us that the sellers are in control, and 80% of the time when you see a bearish engulfing pattern like you see back here, you will see the prices move lower. So what I think we're going to see for the VIX next week is I think we're going to break out below that support level right there, and then we'll have to see whether or not it returns and bumps its head as new resistance. So I'm going to erase this line. Now remember, the VIX is inversely related to the S&P. So what does that mean for the S&P? Well, let's go look at the SPDRs ETF. That's ticker symbol SPY. And you'll see, same thing as what we saw in the Russell 2000. We did move up early on. We pulled back a little bit. And then Thursday, we set a new record high. And then today, again, as I record this on the 8th, we have a bullish engulfing pattern. So that is bullish, no doubt. And I think early on in the week, we're going to break out again, set new highs. And then we have to keep an eye on these oscillators down here. Right now, they are overbought. And at any time, they could start moving lower, which would trigger sell signals. We're right at the cusp of this being a sell signal and very, very close to the CCI being a sell signal. But we have to go with price. Price is what we look at first, supported by volume second. Divergences and oscillators come in after those, and I would stack those in order of priority. Again, price is everything, and when we see bullish engulfing patterns, you can tell that the buyers are in control, and although that's not a very well-pronounced one, it still is a longer green candle. I'll zoom in for you there. It's a longer green candle that engulfs the previous red body candle, which was a spinning top right there. So that's the SPDRs. We look at the Qs, ticker symbol QQQ. You'll see same thing as what we just saw in the SPDRs. We did rally up like I said we would. We did not pull back to the moving average. So I'm going to erase that and more or less redraw what I did last week. I just have to condense my price axis here. I think, again, the Qs are going to rally up, and then maybe we'll see a pullback as these indicators are starting to cross right here. But again, we're going with price. I think we could rally early on Monday, Tuesday. Maybe Wednesday, Thursday, we'll start to see that pullback. But if you have any NASDAQ stock or tech stocks, what I would say is, again, trail your stop. Protect those profits. If you're in new territory here on the upside, you want to protect those profits, and you certainly don't want to turn winners into losers. That's not a good idea to do that. So we want to protect ourselves with stop-loss orders. If you're an option trader, you might consider protective stops or price alerts. If you live in Canada and you don't have the ability to put in stops, then put in a price alert and then just get out manually. So we talked about the diamonds, the Russell 2000, the spiders, the VIX, the Qs. I did not talk about OUSA last week. We ran out of time there, but I'm going to forecast what I think is going to happen here. Again, a bullish engulfing pattern. This is Kevin O'Leary's O-Shares. It's a dividend ETF. Doesn't have a whole lot of volume, but I think as it gains more popularity, I think we'll see more liquidity there. But the reason I track this is because the top 10 holdings are a good cross-section of tech, pharmaceutical. You have the retails like Home Depot. Johnson & Johnson is in there too. So again, you have a good cross-section of the market, and I think it's a good indicator as to what's going on. You'll notice that we have a very narrow trading channel here. See how the highs and the lows are more or less running parallel to one another? I think we're going to move up to the upper channel line and then start to pull back later in the week, because you have a wide divergence here between the price and the moving average. And again, it's very slight, but you can see down here we had an increase in the volume on that green candle. So again, that tells us that the buyers are picking up a little bit more momentum, and we could see higher prices into new territory there. So that's our weekly market report. Go to our website, and right on the front page, you'll see that there's a registration link right here. It says, please register for open house Q&A session with AJ Monty on November 18th. We have an open house Q&A session where you can submit stock symbols, ask me questions. It's an action-packed hour. We have a lot of fun each and every month. All you have to do is click on the register now button, fill out the information, and a reminder will be sent to you via email. We do not spam anyone. We do not sell our lists. We protect all of our clients and all of our followers, so rest assured we're not going to do anything with your email. Just put it in there. You'll get a reminder, and you can ask me as many questions as you like. So have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.